This was a big, big trade. And, the first piece of this trade was a 556.5 ratio spread. The trader had bought the 5.5 calls for about 42 cents, sold them at a buck 20, 25,000 times, then went out and bought, 35,000 went up on the print, but 40,000 total of the 6.5 calls for 65 cents. That is a pretty darn bullish play on a trader that has a track record of saying it's going to go up. So this trader is looking for Nat Gas near term. So we're talking a week and a half, or no, about 10 days for Boyle to make it over 6.5, $7. Now, on the other end, you have a big, huge opening bear ratio spread. The trader sold the six puts 10,000 times to buy the three puts 40,000 times. Took in a slight credit on that. Now this trade needs a pretty strong move lower to make money, but they're potentially looking for Boyle to go to 1 or 1.5. That would be the only reason why you put that trade on. Is if you thought Boyle was just going to absolutely tank. And that would be a trade out to June that has that trade on. Maybe CJ can tell us about some sort of seasonality around Nat Gas with that. But near
Right.
term, the giant flow saying Boyle's going higher. Long term, giant flow saying Boyle is going much lower.
Now, Mark, you did mention that big money flow in an ETF is different than big money flow in an individual stock. So
Yeah.
does Boyle fit into this camp?
Well, no. I mean, it's an ETF technically, but it's levered on one product as opposed to and so the trader here doesn't necessarily own futures on Nat Gas. They may have some sort of that second trade would be an interesting hedge position if I was a natural gas dealer or something like that. But I wouldn't put a trade on. And Boyle doesn't trade super actively like a lot of ETFs. Most of the ETF flow is hedging flow, almost all of it. So it's very difficult to trade off of. Every now and again, you'll see something in like XLF where you can kind of figure out that they're making a supreme bet, or a few of them, but almost unilaterally, there's a second axe to grind. Boyle being a commodity is a little different than equity ETFs.
Let's talk about the fundamentals of buybacks. Over the weekend, Warren Buffett wrote his annual shareholder letter, and this is what he had to say about repurchases and buybacks to the critics of those programs. When you are told that all repurchases are harmful to shareholders or to the country, or particularly beneficial to CEOs, you are listening to either an economic illiterate or a silver-tongued demigod. Characters that are not mutually exclusive. Warren Buffett, are you in the same boat as Buffett, or do you think that the critics in Washington are on the right track to want to tax these buybacks and effectively say that inflation and all of these buybacks only benefit the executive committees?
You can make that argument, and I think Buffett's words are a bit harsh. His pushback is understandable because they certainly spend a lot of money on buybacks. I think for the most part, everyone understands the dynamics. I don't agree with either side. I think what we should do is I think Congress should not tax, change the law so companies that pay dividends aren't taxed on that money. And maybe, yes, you have to pay tax on the dividends you receive. I think the buybacks, I would like to see them convert to dividends. But the problem there is they're double taxed. And that's a problem. That's why companies say, we are, this is shareholder friendly, what we're doing here. I think it would be a lot more beneficial. I know for myself, I'd rather get paid windfall dividends, especially on companies that are spending these kind of billions of dollars on buybacks. You imagine getting that in dividends and deciding maybe to diversify your portfolio. You can certainly buy more shares of the companies that you like if they're paying you handsomely. That's where I think the direction we should go to. There are problems buying your stock too high and then the stock crumbles. Yes, later on, other shareholders will benefit by the lower EPS, that you have a lower hurdle above which you can maybe beat, et cetera, et cetera. But no, for the most part, I'm not a huge fan of buybacks. I would rather see the money come into my pocket vis-a-vis dividends.
I agree with you, and I think that you're right. It's important to be kind of down the middle on some of these issues. If you look at on a case by case basis, airline companies, for example, are buying back their stocks. They never had a rainy day fund, and what has happened? We've bailed them out multiple times. But if you look at an energy company like Chevron, or you look at a company like Exxon, Chevron just announced a buyback program worth larger than all but 12 U.S. oil companies. So rather than going out and expanding their business, going out and buying another company, they return that money to the shareholder. Does that kind of speak to the regulatory environment and the business climate for those companies? I would argue so. Do you agree with that?
Yeah, it speaks to the political push against them. I mean, they're not. If fossil fuels are a dying breed, and then if you're the CEO of a company, why are you going to put more money into exploration and production when everything is supposedly, going to be EV, it's going to be electric, and you're going to be vilified for being a fossil fuel, demagogue. So no, they're going to pay. What are they going to do with all that money? If they're not going to reinvest it in the business, they're going to return it to shareholders one way or another. And I that makes sense for them. It's unfortunate because certainly we would all rather, we should want to see them go back and use that capital to expand their business, because oil prices would be more stable, probably come down. We would be net exporters again, and things would be quite a bit different until we get all electric, which, by the way, I think most people don't realize is probably 25 to 50 years away.
Yep, probably, maybe even longer than that, Shad, depending. But you're going to have your Fiskars, so you're going to be fine. You're going to be not worried about everybody else.
I'm only going around. I'm only going around the blocks. I'm only going around the blocks, and I'm fine.
And you're going to meet plenty of wonderful people as you sit in a subway and charge that.
I can't wait. Can't wait for that.
Yes, lots of fun people. All right. When trading around some of these buyback announcements, what are you typically looking for in the company or the stock to capitalize on the trend of repurchasing those shares?
The first thing is when there's an announcement, what's the reaction in the stock? If you get a little bit of a pop in that, and oftentimes you do, depending on the size of the authorization, there can be some momentum behind that, as other investors think, well, that's maybe good. And also, if you get above certain resistance, and oftentimes they'll make these announcements based on literally, I know it's a surprise, on how it's going to impact the stock. So, and the same thing with authorizations. Oftentimes I know I used to get calls, we need to buy a bunch. We need the stock is sinking a little bit here. Support it. Now, this is with a buyback program. So now when I was on the street and I was handling that, you paid a bid under the stock. Why? Because there's a board meeting coming up. There's some options that are about to expire or about to be converted. And so there's all kinds of stuff that's going on. So technically, yeah, there are opportunities to trade this stuff, but you have to know when the purchases are going to happen. And for the most part, we don't know that. The banks know that. But you can see that in the volume. If you're really astute and you're really watching, you can see that in increases in the volume on a daily basis when they're executing some of that. It's hard to tell what it is. I've done it a long time, so I kind of have an idea sometimes what it is, but it's still hard to distinguish. But there are ways to trade it. It's not something like, oh, let's just all trade based on buybacks. That's never going to work. But yeah, there are opportunities for sure, and we take advantage of them once in a while.